This is London with Bitcoin Spike. We have a very interesting video. Hit the like button if you appreciate these updates. This is London with Bitcoin Spike, former hedge fund owner, private, non-SEC, and not financial advice. Take a look at the left side of your screen. That's the daily chart for Bitcoin. Take a look at the right side of the screen. That's some information from the New York Institute of Finance, where Wall Street goes to school. It's a broadening top, a broadening formation. Why am I bringing this up? Because right now we are returning to a top-level prior support. Very interesting and very important. What are the probabilities that we will meet this specific line here? I'm talking about the exact, let's see, 28,146. What are the probabilities that we will reach 28,146? That's going to be 67%. Guys, 67%, that's an accumulated figure probability over the last 4 decades of information that has been put together, the data, research, market intel over all of the markets, the broader equities, etc. We're looking at a 67% probability of returning to that bottom line support. I'm going to get into some details. I'm going to show the overlap here, and this is the interesting portion. Guys, please pay attention. The notion that we could recover into the wedge and thereafter we could slam down, bam, through the floor. Guys, very exciting. I'm going to talk about the things that will counterbalance that. One of the reasons that I'm bringing this up is today I had a discussion I want to talk about. Today I had a discussion with, who was that? With Anthony. We have to go over some returns, but Anthony's VIP. He says, well, we're going to ride this train while we can. And shout out to Anthony and all the other VIP. Look at the returns today, guys. 263%. Way to go. 152%. Guys, these are sweet returns by J-Mac. Way to go, J-Mac. Look at Liam, 71% and 135%. Way to trade, my man. Liam, way to go, brother. 142%. Look at this. Here's Anthony, 198% and 199%. That was a short. This is a long. Another short. Bam, bam, bam. Look at Liam with this was a short. This was a long. Bam, bam. And look at, guys, J-Max killing it. Doing incredibly well, 152%. That was a long there on BTC and then a long on ETH. Way to go. So, Anthony and Anthony's a longtime VIP. He's a good friend, and I have to tell you guys, it's a top trade group, number one trade group. So when we have discussions, I'm like, okay, how can I pose this to Anthony, because he thinks his opinion this morning was, well, I think it's gonna go up for a bit, and then it's gonna crash back down further below. Now, I said, well, I don't want an opinion. I want a technical fact. You show me a technical fact. So I went hunting and looking for one. Beyond. Now, I'm going to go this, let's get into this. In terms of the potential here, the first and foremost is the probability of the return to the prior support. Boom. What I do like about that return to feature is when you're on the daily chart, please go ahead and draw in that rising wedge that we are dealing with. We target wedges. We deal with wedges quite a bit with VIP. And I'll state this. The apex feature here, the conclusion of the demand function between the buyers on support, sellers on resistance, is right at that preceding, look at that, guys, right at that preceding level of support. Very, very nicely laid out. The technicals are solid. We're appreciative of that fact. Now, the question comes in, and I'm not harping on Anthony. I'm showing you guys what it's like to be VIP for a while. We have a discussion this morning. Some people in the room may have thought, oh, that's a rough discussion. Not at all. It's Anthony and I talking about potential trajectory. Now, me right now, I'm telling everybody, you check out the NASDAQ. I've been saying that on the NASDAQ. It's in a potential runaway pattern. 75% chance of it recovering its all-time high. 20% chance of failure, okay, and some other probabilities therein. But as we look at the recovery here, we're grinding to the upside in a bearish pattern. Why are we going to the upside? I wanted to, first of all, explain this as a throwback feature. Bam, that's 67%. Now, as I looked at this with the New York Institute of Finance, now I will state there are some patterns and some charts out there that will show that this broadening wedge formation can slam, bam, to the upside. Okay, Apple Computer, a great old chart. That's a security. We don't handle securities, guys. We focus on Bitcoin, but just for purposes of comparatives, I focused on that today in the back. It was an example of one that rocked to the upside. Now, the broadening top, listen to this, and this is all credit to New York Institute of Finance. You guys have all the materials. This type of broadening triangle usually occurs at major tops. It shows 3 successive higher peaks. We don't have that third higher peak, noted, and 2 declining troughs. That would be a trough 1, trough 2. We'd have a trough 1, trough 2. This is the breach here. The violation of the second trough completes the pattern. This is an unusually difficult pattern to trade and fortunately is relatively rare. We have some deviations, okay? We don't have this secondary or the tertiary, the third hit along the top, the 1, 2, 3, and whether or not you would call this the first trough and I guess the second trough here on the bottom would be the question. But the purpose is this is a megaphone, a broadening top formation. It's indicative of a great amount of public involvement, okay? So there's some psychology behind this specific formation. And what's interesting is the breach of this line, the recovery, Anthony, excuse me, still under the weather a little bit. Getting better, though. Getting better. A breach of this line, recovery into the body of the wedge, and then, bam, a slam back down and through. So, Anthony, when I went on a tear and a path to look beyond the specifics here, and I appreciate what you guys, when you guys trade. If you guys have a legitimate question or opinion or anything else, we'll flesh it out. We'll figure it out technically, okay? I want to know the probabilities backwards and forwards. Looking at this bear flag, internal flag componentry, bringing that flag componentry to the downside, we still have not met. We still have not met the seller obligation on the specific flagpole to the downside. Given this move to the downside, upward sloping channel, that bear flag, we still have not met the obligation to the downside. However, there are some different patterns herein wherein we have completely satisfied the requirement of the move to the downside. I would say this specific, and I brought this up in the back today, it's a differentiated interpretation in terms of those technicals. If we were to move, let's take a look at this specific, we were to consider first and foremost this specific triangulation here, particularly on the candle wicks. If we go to the candle wicks, I think you'll find this very interesting in terms of not just interesting but accurate. Let's take a look at the specific triangulation. If we were to say instead of the bull, I want to say bull flag, the bear flag, pardon, instead of the bear flag and the flagpole repeat, to which we would still have a seller obligation to the downside. And pardon about that bull to bear. In terms of the conversation here, I'm a bull. I don't want to be bear, but we're going to discuss this. Now, we could interpret this, however, as a bear pennant. Okay, we could interpret this as a bear pennant. Okay, in which case we would be looking at the same potential overall move to the downside, taking a look at that flagpole again to repeat to the downside. And guys, just call it for purposes right now, say 13K. In terms of a completion to the downside, but looking at this triangulation, we would say that we had a separate, let's say a separate fulfillment to the downside. And let's take a look at that. That separate amplitude fulfillment to the downside has been spot on met, guys. It has been very well constructed, very solidly achieved by the markets. This is the daily chart. I brought this up to the VIP last night. I wanted to cut a video on it. And to the extent that this is a hidden feature here, I would just pay attention to that fact. Without a doubt, draw that out on your patterns, on your desktops, on your trade stations. Make sure that you understand what's going on with that specific pattern. And I say that and I bring that up for the following reason. Part of any specific pennant, let's say a bear pennant or a bull pennant, is this symmetrical triangulation, right? This descending line of resistance, ascending line of support in that symmetrical fashion. To the extent that the market were to just choose, guys, listen, to the extent that the market were to choose to just go with the amplitude move of the specific triangulation and to forego, listen, guys, and to forego the preceding flag, I will tell you this. We see this happen very frequently on a bull pennant to the upside. Okay, we see it frequently on a bull pennant to the upside where the traders decide, no, we're not going to repeat that flagpole. Instead, you guys know this, instead, if we were heading, let's say things were reversed here, we were heading to the upside with a bull pennant, you guys know what I'm talking about, right? We would expect the full completion to the upside in terms of a bull pennant. This is very instructional, guys. In terms of a full completion to the upside, website. However, we see frequently, it's like, no, the market just decided to give us the amplitude of that triangle. Bam. And that was it. We never got to that amplitude of the flagpole. So I bring up that reverse move there for consideration so that you can put into context this expectation both on this bear pennant and also I say to provide some light of the I say some some sort of a consideration for our not having met the seller obligation thus far, and a perspective for you to understand this region a bit more. Now, in terms of let's go through this on the right-hand side again, the broadening formation. Now, it seems like we're speaking in hypotheticals. We're speaking in maybe some non-plausible or implausible circumstances. Like we're talking about brand new patterns. No, guys, we've discussed these patterns, but right now it's pertinent given the discussion we had this morning. Anthony, I appreciate you voicing your opinion in the back, and I hope that this information is instrumental. Now, there's going to be a differentiation. Excuse me, guys. Differentiation on the specific candle wicks versus the lines. All right. I would pay attention to that depending upon whether or not you're on the lines or the candle wicks. The obligation for the throwback, which is a return to prior support, has already been met. Okay. Particularly on the USD pair, not on the USDT pair. There was a decoupling of tether. So mind that. Okay. That's important, guys. On the USD pair, the obligation for the throwback has been met. On the USDT pair, the obligation has not been met. So the perfect barometer that we have right now is the constricted apex function of the rising wedge. It's serving a purpose now in terms of our specific technical approach this evening. Now, the big question, and I'm going to leave this up for Anthony. I want him to do some additional technical work on this fact. I want him to look beyond the New York Institute of Finance, beyond this move, which would be here a 6-7 and bam 8. I want him to, and I want the VIP as a whole. I want us all to, and I'll continue to, guys. I'll work through this situation as well. But were we to recoup into the body of this expanding wedge, and now you know there is a potential fire about to be lit in the NASDAQ, potential runaway train pattern. You guys know what I feel about that. It's a strong pattern. So to decouple Bitcoin from the NASDAQ, I don't believe that's in the cards. Could we have some frustration in NASDAQ? Yes, we could. Some extraneous, let's say some other factors could. Let's say a stronger oil market. Something like that, oil rebounding to $100. Some different things like that could cause some problems with equities. We'll talk about that more in the back, but a recoup into this level. Let's all mind the fact, not only the triangulation, independent, guys, that independent measurement to the downside, which would remove the need to use the specific flagpole and a deeper pattern target, boom, that flagpole. And we're going to use that to try and circumvent the bear flagpole carry down to the downside, okay? So understand you may need to rewatch this specific video. It's a very important video. If you don't understand what's going on, I would watch it again. I would pay attention to the New York Institute of Finance here with a recoup, and then boom. Is it par on par? Is it perfect? No, but it is definitely within technical conformance. So, Anthony, this is gangbusters for you. This is me appreciating you being a member of the VIP, me appreciating you trading. All of you guys, when you trade, you guys make VIP what it is. So for those of you who are involved, again, 199%, that was today on a short. Anthony, 198% was on a long, 142% on a short. Let's look at Leon. Those are great trades, by the way, Anthony. Great trades. Leon, 135%, 71%. Way to go, brother. J Mac is just steam plowing through this, guys. 152%, 263%. Huge trades today. Love it. We were kind of consolidated in price action, but you all are proving, I'm going to tell you, you guys are proving that Bitcoin can get it done even on quiet days. You do not have to chase altcoins. You don't have to, guys. You can make the 200, the 100, 300 or 400% in a day, even on a quiet day with Bitcoin. Congratulations to the VIP. I'm extremely excited to see those returns. And let's just tuck this in our toolbox for right now. In terms of the potential, bam. In terms of this potential, boom. We've done it. We've gotten this discussion out of the way. We've justified having met a target already without the need to go any further down. Now, Now, with that said, everybody loves lower prices. We also love the bulls to get up and run. This is London with Bitcoin Spike. Hope you guys appreciate this in-depth TA. Go ahead and join our group if you want access to this type of information in the back, mostly in the form of charts all day long, and great discussion. We're having a great time in the back. I appreciate you guys a lot. We're working on setups this year. We're building in 2022. We're building VIP, working on setups. This link will allow you to join our group. Hit that link, and after you join VIP, go ahead and put I am VIP on the first pinned tweet. That'll put you in touch with me, and I will put you in the back in the winner's circle. Apologize for my voice just a bit today, but I'm just slightly under the weather, and we will get that done. A lot of good trades in the back, rocking bells. Bam. Guys, we say we rock the bells. Those are bump and run variations, and I hope you guys appreciate that 67% likelihood that we would get up to this level, perfectly in conformance with that apex feature. Pay attention to those wedges. Guys, 9 times out of 10, that wedge constriction, that apex, that conclusion of the demand function between the buyers on support, sellers on resistance, is telling you something. Okay, it's there for a reason. That apex is telling you something. This is London with Bitcoin Spike. It's another VIP weekend. We are trading. So excited to have such a good group. And I want to shout out to Venus, our #1 contributor at over $10,000. Hope you're having a great night with the hubby. Hope you guys have a great time. This is London with Bitcoin Spike.